In a market increasingly dominated by AI giants, green tech titans, and volatile meme stocks, it's refreshing to see a company like Haoxin Holdings, Nasdaq, HXHX, make a calm, calculated debut. But don't let that cool entry fool you. This temperature-controlled logistics player from China could be warming up for something bigger. Haoxin Holdings recently entered the public markets with an IPO that raised $7 million, offering 1.8 million shares at $4 each, hitting the lower end of its expected $4 to $6 range. While modest in size, this IPO is a strategic launchpad, positioning the company for long-term growth in one of the most essential and often overlooked industries, cold chain logistics. Small Blue Diamond. What does Haoxin do? Haoxin Holdings operates a network of subsidiaries across China that offer temperature-controlled truckload and urban delivery services. These aren't your everyday packages, they're critical cargo, fresh fruits, perishable foods, sensitive chemicals, and delicate electronics. In other words, goods that depend on precise temperature and timing to arrive intact. In a country where supply chain demands are surging with the rise of e-commerce, biotech, and food safety regulations, Haoxin is tackling a very specific niche that's becoming increasingly vital. Their services bridge the gap between producers, warehouses, and final consumers, ensuring temperature-sensitive items are delivered safely and efficiently, a logistics challenge that many companies still struggle to meet. Small Blue Diamond. Why is HXHX catching attention? Despite a low-profile IPO, the stock's growth potential lies in a combination of strategic positioning and market fundamentals. Essential industry, growing market. China's cold chain logistics industry is expected to experience significant growth due to urbanization, rising consumer expectations for food quality, and increased demand for pharmaceuticals and fresh imports. Haoxin is targeting the heart of that expansion. Diverse client focus. Haoxin isn't putting all its eggs in one refrigerated basket. The company serves multiple sectors: electronics, chemicals, fruit, food, and commercial goods, reducing its dependency on any single industry and creating a buffer against volatility. Urban delivery edge. With an added focus on urban delivery, Haoxin is also tapping into the growing demand for last-mile logistics, an area that has seen exponential growth due to food delivery platforms, fast e-commerce fulfillment, and pharmaceutical distribution. IPO valuation leaves room to run. Priced at the lower end of its range, Haoxin's IPO valuation leaves room for upside. This can be appealing to retail and institutional investors seeking untapped growth stories in emerging industries. Small Blue Diamond. Challenges and caution. That said, this is not a polished blue-chip stock. Haoxin's financials are still emerging, and the IPO was relatively small, which means liquidity might be low, and volatility could be high in the early days of trading. Additionally, operating in China brings its own regulatory complexities and economic sensitivities. However, smaller IPOs like this can often go under the radar before making significant moves. For example, if Haoxin successfully scales its operations or lands contracts with major Chinese retailers, it could trigger substantial investor interest, especially as attention shifts to less saturated opportunities in logistics and infrastructure. Small Blue Diamond. Long-term potential. With a solid foothold in temperature-controlled logistics, Haoxin is solving a crucial challenge in China's supply chain, getting perishable or sensitive goods from point A to point B without risk of spoilage or damage. That niche, while not glamorous, is critical. And companies that solve logistical headaches reliably tend to become sticky parts of the supply chain. The IPO might have been quiet, but Haoxin's long-term potential is loud. With China's continued focus on modernizing its distribution networks and ensuring quality control in food, pharma, and tech transport, companies like Haoxin could play a pivotal role. For early investors, HXHX presents a high-risk, high-reward opportunity, the kind of small-cap stock that could surprise with consistent execution and strategic growth.